Welcome to the Trade of the Week. Some of our subscribers and members have asked if the DFTS strategy would work on different markets, and the answer is absolutely yes. I tend to trade the ES because it is a market I've traded for many years and I feel very comfortable trading it. But this week, I'll share with you one of my trades in CL. The technique works exactly the same, but in the case of the CL, I tend to use lower time frames, so I'm in and out rather quickly in order to avoid exposure. So my trades in CL are quicker, and the target, of course, is smaller because I use a shorter time frame. So to scalp, I like using the 5,000 volume chart as a reference frame and the 1,000 volume as a trigger chart. So let's begin. On Friday, I saw that prices had been closing above the moving average on my reference frame. So I moved to my trigger chart looking for a buy signal. That signal came just a few minutes later, another advantage I find when using a small time frame. I had the SAR, the arrow, the bar, and the moving average all in blue. I even had the flag pointing up, so I placed my buy order a few ticks below the open. The bar opened at 62.23 and my order was at 62.20. Usually in CL I get filled within 5 ticks from the opening, so I used 3 ticks to secure my entry. So I was filled almost immediately. I placed my stop at the SAR, which meant only a 10-tick stop. That's a really small stop in CL, but on this time frame, it's affordable. Now on the CL, I used 10 ticks as my first target instead of 6 as I typically do on the ES. If my target is filled, I move my stop 10 ticks from my entry, if the SAR is farther than 10 ticks, just to make sure my risk is reduced to only one contract. So I placed my sell order at 60.30 for my first target. Here you can see my first target was reached, so I changed the number of contracts in my stop and move it with the SAR because the SAR was 8 ticks from my entry instead of 10. The trade was moving very quickly in my direction, as desired, and by now I was able to move my stop to 62.16 with the SAR. At this point in the trade, I could afford to have one stop with the SAR and another one 10 ticks below the moving average. The moving average was at 62.33, so I moved one stop to 62.23, that was 3 ticks above my entry, and the other one at 62.30, which allowed me to lock in 10 ticks in profit for the second contract. As you can see here, by now the SAR was very close to the bars, so I was expecting to be stopped out any time. But I had locked in 22 ticks for the second contract and 10 ticks for the third, plus I had my 10 ticks for the first contract already. So all in all, this is turning out to be a nice trade. Now my second contract was stopped out at 62.45 with 25 ticks of profit, and my third stop was now placed at 62.33. Here you can see that the market came very close to stopping me out, but by keeping the stop 10 ticks from the moving average, that protected me. Now instead of being stopped, I noticed I had another buy signal which I could use to add to my position. I was ready to add to it as long as the SAR dot moved from above the bars to below the bar and the moving average turned blue again. So with the next bar, it gave me all that I needed to place another buy order. I did so at 62.41, 4 ticks below the opening of the bar at 62.45. So my order was filled and I placed the stop together with my last stop from the previous position. So now I had 2 contracts running with the same stop at 62.33. That was only an 8-tick stop for my new position. So now you can see I had zero risk. I was able to move my stops with the SAR again. Now here on this last chart, there's something interesting to notice. Notice that the size of the swing before the bars turn red has become smaller. That's an indication that the market is getting exhausted. My stops for both contracts are at 62.49, and I did get stopped out a few minutes later with a total of $720 in profit. Considering the time frame, this is actually a great trade, and that's why I chose to show it to you in our Trade of the Week. So I hope you enjoyed it and that you could see clearly that the DFTS can work in small time frames as well. You just have to adjust your targets and expectations. But still, you can get trades of $500, $700, and sometimes even more. Have a great week. Bye.